Okay, good morning everyone. And again, this is your Prof. Zeus and welcome to another session in our intermediate accounting. And for this second session of liabilities, we will be discussing about liability for bonuses. Okay? Now, what do you understand about bonus? Okay? So bonus is an incentive given to managerial employees or even high-level management to incentivize for an exemplary performance. Okay, not just regular performance, but exemplary performance. Of course, all of us would like to get bonuses, but only limited individuals may be able to get this. Okay, so as an incentive, this is also an expense on the part of the company. It is a deductible expense for tax purposes, and this could be based on gross or the net profit of the entity. Now, let us assume that the company has profit of 2,500,000. Okay? And let us assume that the bonus rate is 10%, while the tax rate is 30%. Okay? As I mentioned, bonus can be based on gross or net profit, okay, and can also have some variations. Number one, for instance, it could be based on profit before bonus and tax. This is the simplest, before bonus and tax. Okay, so therefore, under this assumption, how are we going to solve this one? So therefore, your bonus is equal to profit before bonus and tax, and the bonus rate is 10%. Okay, before bonus, so there's no deduction yet. Okay, so this is 2,500,000. Okay. So therefore, your bonus is 250,000. As simple as that. Okay? Now, how about the tax? If we try to compute for the tax is what? 30%. Okay? So this is 30% of the profit, which is 2.5 million, less the bonus. Why did we deduct bonus from the profit? As I mentioned earlier, that is a tax deductible item. So therefore, let's try to solve. So we have here a symbol of inclusion in your algebra. So we have to solve this one. So 2.5 minus 250,000. So this is 2,250,000. Okay? And what will be the answer? So therefore, the tax is how much? 30% of 2,250,000. Let me just get my calculator. So that's 2,250,000 times 0.3. This is 675,000 for the tax. Okay? So for the bonus, this is 250,000, and for the tax, that's 675,000. So at the end of the year, if it is based on profit, then management can already make a computation estimate of the bonus. And this can be booked as a liability in the books of accounts, debiting employee benefits or compensation and crediting liability for bonuses. Okay? Number two assumption is that it is based on profit after the bonus but before tax. Okay, so the second assumption is that the bonus is based on profit after the bonus but before the tax. So what will be our equation, or how will our equation look like if that is the assumption now? Okay, so therefore bonus is 10% of the profit, which is 2.5 million. Since it says here after the bonus, so we have to deduct the bonus less B. Okay, so that will be our equation for the bonus. And what will be our equation for the tax? Well, let's first solve this one. So again, we have symbols of inclusion. So what are we going to do with this one? So as you learned in your algebra, what you have to do is to distribute the 10% dito sa mga nasa loob ng ating parenthesis. Okay? So therefore, this will be 250,000 minus 0.1 of B. Okay, so this will now be your equation. And again, we need to transpose because B is on the other side. So transpose this to the other side. Okay. Since this is negative, so that will become positive. So that will be B plus 0.1 of B is equal to 250,000. Okay? So therefore, there is a coefficient of 1 here. So therefore, that will be 1.1 of B is equal to 250,000. So divide this by 1.1 and this side by 1.1 as well. So you will get, so cancel this out. So B is equal to how much? 250,000 divided by 1.1. So that's 227,000. So this is 227,273. So this is now the amount of the bonus, 227,273. Okay? How about the tax? If you'd like to compute for the tax, that is 30% of the bonus, 2.5 million, minus the bonus of 227,273. Why did we deduct the bonus here? Again, because it's a tax deductible item. So therefore, let us try to solve. Divide minus. Okay, so therefore, this is 30% of 2,272,727. Okay? So therefore, multiply this by 30%, so you'll get, so therefore the tax now is 681,818. Okay, so this will be our corresponding tax. So that is assumption number 2. Now, assumption number 3 or letter C is that the bonus is based on profit before the bonus, but after tax. Okay? Profit is based on, bonus is based on profit before the bonus, but after tax. So how will our formula look like? Okay. So therefore, bonus is 10% of profit, which is 2.5 million. Okay, this is before the bonus, so no deduction for bonus, but we will deduct our tax. Okay? So therefore, so we cannot solve because there are two variables there. So what we are going to do is to find the equation of our tax for us to be able to substitute that on the tax portion. So tax is 30% of 2.5 million minus the bonus. Okay? So we will now substitute this formula dun sa tax na formula. Okay? So this one, this formula will then be substituted here. Okay? Now this is now getting a little bit complicated because this is algebra. So bear with me. Okay? So this is 10% of 2,500,000 minus 30% of, or minus 30% of 2.5 million minus B. So if you will notice, we now have two symbols of inclusion. You have the outer one and the inner. And as you learned in your algebra, you have to work from the inner to the outer. So we will start with this one, okay? With the inner portion of the equation. So therefore here, so bonus is 10% of 2,500,000 minus, so 30% of 2.5 million, so 2.5 times 0.3, that would be 750,000. Okay, minus and minus, so plus 0.3 of B. Okay, so we now have just one symbol of inclusion. So what are we going to do? Distribute 10%, no? dun sa mga nandun sa loob ng ating symbols of inclusion or parenthesis. Okay? So therefore, our equation would be 250,000 minus 10% of 750 is 75,000. Okay, plus, what is 10% of 0.3? 0.3 times 0.1, that's 0.03 of B. So we have here B. Okay, so now we have two B's here. So we are going to transpose this 0.3 of B to the other side. And as you know, if we transpose, we have to change the sign. So that will now become negative. Okay? So therefore, this has a coefficient of 1. So therefore, that would be 1B, okay, minus 0.03 of B is equal to, so that's 250 minus 75, that's 175,000. So therefore, 1 minus 0.03, that would be 0.97 of B is equal to 175,000. Okay? So we're now down to the last one. So we are going to divide both equation by both sides, by 0.97 for us to be able to eliminate the digit and the number and then come up with a B, with the value for B. So 175 divided by 0.97, so that would be 180,412.37. So this is now the amount of the bonus. Okay? So bonus is 180,412 pesos. Now, let's substitute that to our tax computation for us to be able to find out how much will be our tax liability. So that would be minus 180,412.37. Okay, so therefore the tax will be, let me erase this. Okay, so therefore, the tax will be, that's 2.5 million minus 180,412.37. That would be, okay, so therefore, this is 30% off 2,319,587.63.3. So this is 695,876.29. So this would be our tax. Okay? That will be the tax. The last one is that profit is based on bonus is based on profit after the bonus and tax. Okay, so bonus is based on profit after the bonus and the tax. So we have to change our formula here to add also the bonus, because after bonus and after tax, so minus the bonus and minus the tax. Bonus less tax. Okay? So therefore, again, we have to have a formula for tax. We can substitute because we cannot work with two variables. Okay? So therefore, for tax is what? 30% of the profit minus the bonus. Okay? So again, we will substitute this tax formula here. With that, we will be left with just one variable, which is B. So therefore, let's have it. So B is equal to 10% of 2,500,000 minus B minus 30% of 2.5 million minus B. Okay, so this will be our formula. Okay, I'll give you like 10 seconds to work on this formula while I clean up the board, please. Okay, let's try to solve. Again, we work from the inner side, so we distribute the 30%. Okay, so now we have the formula for the bonus. That's 10% off 2,500,000 minus B minus, okay, so that's 2.5 million times 0.3, that's 750. So minus 750,000 minus plus minus will be positive 0.3 of T. So this will now be our new equation. Now again, we have to distribute this 10%, okay, to all the items inside the parentheses. Okay. So let's do it. So bonus is equal to 250,000, okay, minus 0.1 of B, minus 75,000, plus, okay, so that's 0.3 times 0.1, 0.03 of B. Okay, so now you have just one variable, that's letter D. So what are we going to do? We're going to transpose all the variable on the other side. Okay, so therefore, this has a coefficient of 1. So therefore, this is B. Again, you transpose, you change it, you change the sign. So that's B, also 1B. And then this one, 0.03 of B. This is positive, so you change it. And then 250 minus 75, that's 175,000. Okay, so therefore, that's going to be 2B, 1 plus 0.1 minus 0.03, that would be 1.07. Am I right? Okay, negative, and then positive, and then, okay. So that would be 1 plus 0.1 minus 0.03. 1.07 B is equal to 175,000. So divide this by 1.07 and this side also by 1.07. So your bonus would be equal to how much? 175,000 divided by 1.07. So that would be 163,551.40. So this is our bonus amount. Okay, now you substitute this one dito sa tax formula for you to find out, to calculate the value of the tax on the profit, okay, after deducting the bonus. Again, why do we deduct this one? Because this is a tax deductible item. Okay, so any questions, guys? Okay, so with this, thank you very much for watching, and I'll see you in the next session. Okay, bye.